Welcome, ladies and gents. So, this video is basically a segment of a podcast that we did with Denis Mezheritskiy of ROI Business Brokers, which is a business brokerage. And this segment basically explains how the SBA system, so the Small Business Administration, can basically help buyers buy a business essentially and minimize their risk. So in this segment, Dennis explains the whole process, how it's more of an insurance policy, quote unquote, as opposed to a direct loan, which banks to go to, how the banks function with this, etc. If you enjoyed this segment, make sure to watch the full podcast itself, which is linked in the description below. And if you have any questions, feel free to ask them in the comments. If I'm not mistaken, how this can be used to potentially purchase a business?
Yeah, SBA is a phenomenal program for business to buy companies. I mean, what the simplest way of thinking about SBA is not some kind of a glorified system. Think of it as insurance. Think of it as pure, simple insurance policy. So the government gives out an insurance policy. SBA, Small Business Administration, they're acting as an insurer for those banks. So if I'm Bank of America and I'm giving out a loan to a risky business, I mean, buying a business is risky. There's a lot of risk. Some of the companies have no assets. Like you take a healthcare company, right? Like a home health company, they have no assets. They don't have trucks, equipment. They're just employees. They're just goodwill. So what happens in those risky businesses, in the business in general, SBA steps in and say, well, if you insure your loan, if the Bank of America insures the loan through SBA, then the SBA will pay in case the loan is not paid off. The SBA will fund the bank with 70% of that amount. So they taking that risk of the bank on lending the amount. So and the way the SBA works is if you are buying a company through an SBA, there's a percentage of fees that goes to an SBA at closing, which will be amortized through the loan, but that fee will be charged to you at closing. And that's how SBA as an insurance, I mean, it's not insurance, but that's how I like to compare it, because that's exactly what it is. And a lot of people think you go into an SBA and they give you the money. That's not how it works. You go to a bank that is SBA approved, they give you the money, and SBA will underwrite it and insure it.
Are a lot of banks SBA approved?
Tons of banks are SBA approved, but there's different types of loan for SBA. You can have an SBA loan for the real estate. You can have an SBA loan for the business. You really need to know which bank to go to. There's some banks that they might have. For example, there could be a bank that they've been doing way too many HVAC company acquisitions, right? At some point, so they're looking at their portfolio and they say, well, we have way too much risk in one sector, so we don't really like companies in that sector. And not to pick on HVAC companies, just in general. So you really need to understand which banks actually do the lending, but tons of banks are lending.
Right. Okay. That makes sense basically. So if they're like overcommitted into like one sector, then they'll want to like diversify their portfolio with something else, essentially.
Yeah. I mean, that's exactly right. And also it's not SBA rules as much as individual bank rules. They might, the SBA will allow you to buy a business with as low as 10% down, but there might be some banks, they want to go higher. They want you to put at least 20% down. So every bank has their own policies. It's not really go in a cookie cutter way, but I mean the process is the same. So there's banks that are pre-approved by the SBA, and then there's other banks that work directly with the SBA. It doesn't really matter if you have a broker, if you have somebody you've done business with. You should always be getting opinions from at least 2-3 banks at any given time.
If you work with a broker throughout the sale process, for example, do you reckon that a broker would basically know which banks are buying which businesses, for example, or which banks are giving funding for which businesses?
Yeah, I mean, it's tough to say. A business broker, like, I know which banks will lend on this deal. So when I'm representing I'm mostly representing sellers. So when I'm representing a client who's selling the business, I take down all their financial information, and before I have it listed, I actually take it to a couple banks to make sure that that I can get this business pre-qualified. with SBA. So, but a typical, to answer your question, a typical business broker should know which has those relationships with banks. An experienced business broker knows the banks that one should work with, and absolutely can be a tremendous resource. Even though that he or she might be representing the seller, a business broker is a tremendous resource because they know exactly what steps to take in order to get this deal done.
Understood. Makes perfect sense. Now, on the topic of valuation.